Get to our next guest. Apple, Amazon, Facebook, Netflix, all touching record highs yesterday before they reversed, closed down for the day. Let's talk to Krishna. The NASDAQ, by the way, which also hit another all-time high yesterday, ended up closing down 2%. For more on the markets and tech, we're joined by Krishna Mamani, former vice chairman of investments at Invesco. And I think your view, from what I can tell, Krishna, is that the markets are looking through the earnings reports as backwards looking. And at this point, anything less than a total lockdown, maybe the market isn't necessarily out over its skis, or is it?
Well, no, I don't think the markets are over their skis. I mean, they're not focusing on the earnings and the drawdown in the second quarter, and rightly so. Trying to figure out the cash flows of businesses off of one quarter when your risk is for 30 years doesn't really make much sense. So I think the consolidation in technology yesterday was actually a really good thing. If it continues the way it was over the last few weeks, we would get ourselves in real trouble down the road. So I think the market needs to consolidate at this place, and we just need to focus on the economic data. All this talk about virus, I think, is somewhat irrelevant, because unless we get into a lockdown, and if we get into a lockdown, it doesn't really matter. It's all over. And if we don't get into a total lockdown, whatever we need to do, we can get that through the economic data just as much. So I'm ignoring the virus this, virus that. We'll just focus on the economic data for the time being, and focus on the virus for a risk perspective.
It's hard to do with the headlines, but yesterday the S&P traded at a high. It was up for the year. So either the Fed is just dumping so much money into it that it's just all artificial and all disconnected, or the markets are able to see through this period that we're in right now, and eventually, we're going to either live with the virus or have a vaccine, right?
Yeah, so I think the Fed is certainly the biggest driver in the marketplace by a wide margin. At the end of the day, we are here because of the backstop that the Fed has done, and you can't ignore that. But at the end of the day, if things are going to work out for the equity markets, we have to see a revival in the economy. And I think on that front, despite all the virus thing that you were talking about, things are looking much more, from my perspective, much better than I would have expected at this point. And for the near term, I think I'm focused on banks, because I think they will tell us whether the drawdown in their portfolio is going to be as large as we were really thinking beginning of the crisis. And I think things are looking much better on that front. So I take some solace in that.
You like tech. It's much cheaper as of yesterday. Well, not much, not as overdone as maybe in the midday yesterday. It was down, and now it's selling off right now. If you can see the NASDAQ, Krishna, would you wait a while for your favorite names, because it seems like that may have been significant yesterday in terms of these things just being too extended?
Well, so I think if you're buying tech, you're not buying it for 2 days. You're buying it for 10 years. So if you own equities, it's because you're looking for growth. And I think these tech companies are delivering significant level of growth, but much more than any other part of the U.S. economy. And therefore, buying it for the long term makes a lot of sense. I think you use near-term trading patterns more for your entry and tactical points. But from a strategic standpoint, tech is, I think, where the action is going to be for the foreseeable future.
And you like the banks, too.
Yeah, I like banks, and I think I like specialty asset managers. People who are going, if you look at individual portfolios, what is most critical now is finding ways of generating income. And if you just buy regular corporate bonds, that's not going to be the case. So I think people who can provide other sources of income, like Ares and private equity people, those are very attractive in the asset management space.
Okay.